Now that we understand this 5-driver business model, we will now explore the 3 financial statements. You may remember that the first 3 business drivers of cash, profit, and assets reflect the statement of cash flows, the profit and loss, and the balance sheet. Now, I realize many of you would rather have a root canal than jump into financial statements. So why should we care about them? Well, let me give you some reasons. First, so that you know where to focus your actions. Second, to know for yourself how your organization is doing. Third, to be credible in conversations with leaders. Fourth, well, if you have stock options, you certainly want to understand what's impacting their value. And then fifth, to help your team understand how the company is doing. And as a result of that, to better help focus their efforts in the right direction. So understanding financial statements is important for you personally and to your company leaders. I was in Russia recently working with a $100 billion organization, and the person introducing me made the comment to the audience, if you don't have a basic understanding of the financials, you'll be fairly limited in your career. Now, my goal is not to train you to be an accountant or a CFO, but here's what I hope to accomplish with you. First, know how each statement is organized. Second, know what the most important measures and metrics are. Third, know how to analyze whether a company is on the right track or not. And finally, create line of sight so that you know how your actions can impact the results on each statement. Now, let me provide a little history on financial statements, and let's go back to the 1920s, also known as the Roaring Twenties. And during this time, business was booming. Now, companies were not required to submit audited financial statements, so the information they provided to investors and shareholders was embellished and enhanced. And that, of course, led to the run-up of the stock market, which crashed in 1929 and resulted in the Great Depression in the 1930s. Now, in 1934, the Securities and Exchange Commission, or the SEC, began requiring companies to submit audited financial statements, and these can be found in Form 10-K. Now, the financials in Form 10-K can be found in several places. First, look on your company's website under Investor Relations, and in that section, look for SEC documents or financial statements. Second, there are many financial websites out there like Google and Yahoo. And then finally, if you're with a privately held company, if they don't want to share the financials, they don't have to, but it doesn't hurt to ask. Now, while it may seem like the 3 financial statements are independent and measure 3 separate activities, they actually are tied together, and let me show you how. The P&L, or profit and loss, starts with sales, and after you subtract all expenses, ends with profit. Now, the statement of cash flow starts or picks up with profit, and after cash is generated and used, shows how much cash is on hand. Now, the balance sheet starts with how much cash is on hand, and after you subtract liabilities from assets, ends with shareholders' equity. So in essence, they tell the story of how a company's sales ends up to the benefit of shareholders. And while it might not seem like the most exciting story in the world, it might be a little more interesting than you think.